In this video, I'm going to show you all the trades you could have had. Hello everybody. What we're looking at is the 15-minute chart, looking at just areas where price would likely react. You're looking at, like I've discussed before, likely where you'd put a stop loss. I also look at break and retest. So just areas where prices reacted. So you start marking things off, you're going to see what I'm talking about. So we're going to take a look at that right now. Okay, so what you can see here is I've marked everything up. I mark areas where I've seen price react, and we're going to take a look at this. So let's dive into this. I'm going to start at the beginning here. Now you can see, where are we here? Right there, that was the start of the day. So what we're going to do is go through this piece by piece, and I'll show you the opportunities that came around. So okay, let's just start there. Drop down to the 1 minute, because that's where we take our entries. Okay. We'll try to go through this as quickly as we can. You can have a pretty good idea on how it looks for some of it, with everything marked to the right. Okay, so let's start this up. Remember, all our areas are marked. Price came into the area, and then engulfing pattern. We were targeting the high. If you look at the top here, the high of the leg on the 1 minute. Now, okay, look it. So it did hit it. It did reach the target. Now, we would have ended up on this one. Like, this is a 1 to 3, which is great. Now, when you've gotten to 1 to 1, sorry, that's off a little bit, but when you reach a 1 to 1, you would have taken partials. You could have taken another partial when it's maybe a 1 to 2, and then let the rest run. Now, you could have tried holding on to the whole thing and not taking anything at all. You would have also moved your stop loss to break even when you would have reached your 1 to 1. So this would have been a successful trade, but I'm not sure where you are. Like, for me, when I trade the New York. So I'm 8 until 5 EST. So that's when I look for trades. And so this wouldn't have been a good time for me. This is like 1:44 in the morning for me. So depending on where you are, this might have been a good trading opportunity for you. So what did you see? Price pushed down into the area, and then you have your exhaustion, right? And then you have your bullish candle, engulfing candle right there. So you would have gotten in on the trade just before the candle closed and tried to ride it up to the top of the leg. And for this one, it did work out. So then as we go along, go along on this one, and then there we have it again. So you could see the area that was marked off. It came up into the area, shown signs of an exhaustion right there. So as it got up there, strong bearish engulfing candle, would have entered in on the close of the candle. Now, it won't be exact when you do this, because the candle could move either way within the last few seconds, but you're trying to time it as close as you can. So we're just using this as an example. So we were able to get into this. So you would have already taken partials and moved your stop loss to break even because you've already reached a 1-to-1. Oh, there we go. So this was a 1-to-5, which was fantastic trade. So you would have taken a couple partials if you wanted to. You have to decide what works best for you. And this was another great trade. Now, it's not the perfect trade, but it's pretty close, you know. So, and that trade there, that was, you know, entry was at 2:40 in the morning. So, I guess depending on where you are, this still might have been a good opportunity for you. Wouldn't have been for me. I wouldn't be watching the charts at this hour. I'd be sleeping. So now as we go through, there we go. So here we go again. Now this is interesting because this is a tough call, because I would have considered maybe, no, I wouldn't have. See, it came down and touched into the area, and then, but it didn't really close above the wick, so it didn't engulf the whole candle. So I don't think I would have taken that one. And so it comes back in for a second touch, and again it doesn't close above the wick. Now this time it pushes in a little further and it closes, so I would have taken this entry for sure. So now if we take a look, oh, this went straight up, so this wasn't too bad. This was nice and smooth. This time things move smoothly, I guess, at this time of the day. So it came down, engulf, exhaustion, so pushed to the upside, bullish engulfing pattern right there. So you would have entered in on the close, and this was a 1-to-2. You would have taken partials halfway, moved your stop loss to break even, and you would have done this as well. So if you would have been trading during this time of the night, depending on where you are, this would have been fantastic for you. You would have had a few trades that did really well. Now, as we go through this, there we go. There's another entry. It comes down and touches, comes up, touches again. Engulfing pattern. Would have taken the trade. Now this one went rather quickly. This one, 4:31. So 7 minutes. It was a 7-minute trade for a 1 to 4.7. So this was phenomenal. So now you would have taken, see, you could have taken 2 partials at this point, or, you know, there's nothing wrong with just taking 1 partial and letting the rest run. Because it's entirely up to you on this one. So like I said, that would have been another good trade. That was at 4:30. 7-minute trade, not a bad deal. So one thing I like about trading the 1 minute, you can be in and out of trades. I don't think I've had a trade yet over an hour. Well, you know, give it time, I'm sure I will. But that's how it's been going lately. Lots of times I'll take a few partials, and then my longest trade so far has been about an hour. So you can see again here, we had this area marked off, came through it, came back into it, signs of exhaustion, maybe even considered a doji. and then closes, you know, a bearish engulfing pattern there, followed by another one, but you would have got in on this one. So when we're looking at this, let's shrink this up a little bit. Okay, so as it's going through, now this has already reached a 1-to-1, so you would have taken partials and moved your stop loss to break even. So now if it comes up and touches this, you'll be stopped out of the trade. So that would have taken you out. You wouldn't have lost any money. You would have covered your commission and probably made a little bit of profit off of this. And there was another entry pattern right here. So if you can see this right here, as it came back into the area again, signs of exhaustion, followed by a bearish engulfing pattern. So you would have entered the trade right there. And then we would have followed this through. Now we can't see if this would have, let's see how this would have played out in a second here. This would have been awfully close. Yeah, so, okay, so you would have taken a partial because it would have hit over there. So, okay, you would have taken a partial and moved your stop loss to break even. And then we see how this goes. It didn't come back and stop out. Keeps going, hits the trade. So this was pretty good. This was a 1 to 11 and a half risk reward. So phenomenal trade. That was a beautiful trade that happened there. So if we take a look at this, we can see that, okay, so 5:19 in the morning. So this one was a couple hours. So this trade was a few hours, which still would have been a beautiful trade to have. So then if we go look at the next one. So there we go. So, and again, comes into the area, touches into the area, comes in, engulfing pattern after a sign of exhaustion. We enter in on the trade, and stop loss, of course, below the low, and we're aiming for the high of the leg. So, or the, so I don't know if you'd call it a shoulder, but you're aiming for the peak or the bottom. It doesn't matter which way you're looking at this, but you're reaching for the peak on this one. So now, so at this point, looks like you would have taken partials and moved your stop loss to break even. You would have been stopped out of this one now, so you still would have made something off of it, but you can see that it actually did reach the take profit. So again, this is entirely up to you to decide if you want to move your stop loss to break even. This is, sometimes it's going to work in your favor, sometimes it's not going to. So you really don't know. But this is where you're going to have to experiment and try something that you're comfortable with. You might be somebody that just likes to enter the trade, and then you just get away from the computer and let the thing play out and see how that works for you. But if you're somebody that likes to secure some profits, You might want to take partials and move your stop loss. So that's entirely up to you. So as we come along here, oh, let me pause this for a second. There we go. So there wasn't any potential opportunity there. Oh, that's not entirely true. So I guess there's something that could have been taken here. I didn't have it marked off, but you can see. Oh wait, no. Sorry, no. Sorry, just ignore what I'm saying there. Okay. Where are we here? Okay, so yeah, so we're coming into more areas that I had marked off. They weren't potential opportunities because I was just marking the areas off. Oh, maybe that was... Maybe that was it. Let me see here. Nope. We got more coming. Okay. Sorry, guys. Tried to speed this up for you. I didn't realize that the other ones were so far down. But you can see, like, I have all the areas marked off. I was getting some of it confused there, just looking at the 1 minute, wondering why I didn't take the trade. It was, those areas were marked on the 15 minute. So we're just chewing through those right now. Now you can see. Here we go again. So what do we have? Price comes down into our area that we had marked off on the 15. Comes in, touches it multiple times, comes in. Now, this is interesting because I could have taken the trade right here. This would have been an opportunity right here. And your stop loss just below it. Now, it's awfully close, so I don't know if it would hit. Depends how much room you give it. But you might have been okay for that one. Well, anyways, it comes back into the area. And then signs of exhaustion in this area, followed by a bullish candle, engulfing pattern. So I would have entered in on the close, and see how this plays out. Now, this has already reached a 1-to-1, so I would have moved my stop loss to break even, and would have taken partials off. Now, partials, you can decide what you want to do. I take 25% off on the first partial that I take, and I always move my stop loss to break even when I take my first one. And now we'll have to just see how this plays out. Now, I could come back and hit it, but you could see with this one, this actually worked out fairly well. It didn't come back. You could have taken another partial along the way if you wanted to. And this was a 1 to 4.4, so not bad. This trade, okay. Okay, 1 second, guys. Sorry, I'm just trying to figure this out. Okay. So, sorry. And now, what do we got here? So, 31. So, yeah, well over an hour for this trade. Almost an hour and a half. So, still not bad. You know, this is the one thing I like about trading the 1 minute. Like, it's just, you're not in the trade forever. You're in and out the same day. You're not holding anything into the next day. So 5 o'clock is the end of the day for New York here. So I close it no matter what. I don't hold on to a trade. I close it, and then I don't have to worry about how this thing plays out. I'm comfortable with doing that, and that's the way I'm going to stick to it. Now, you can do it any way you want, but I think you're really going to enjoy doing it this way. Now, here we go again. We had an area marked off. It's come in and touched it. And there we go. So, came in once, came in a second time. You can see that it's stalling, signs of exhaustion, followed by a bullish engulfing pattern. So where do we target? The top of the body. I don't aim for the wicks because oftentimes you can see sometimes where price will come up into that area and not come up all the way. It'll just come up just above and then it'll change direction. So I'd rather just take it a little bit earlier and just take it at the bodies of the candle instead of the wicks. So there's the entry, and now if we play this out, okay, so we've already reached a 1-to-1. You would have moved your stop loss to break even. You would have taken partials. And it looks like so far this hasn't come up. I'm not sure. Okay, so now I'm not sure why I had this one marked. I don't know if it was a zone that I had originally marked and I removed it, but let's take this one off because there's no point of showing that if I don't have anything to support it. So we're still playing this trade out. Okay, so there we go. So that came up and hit it. Now, if we take a look at this, so we got in there, 322, and 5 o'clock, 5 in the morning. So that was just over an hour and a half, and the risk to reward was 1 to 4.5. So not bad. Like I said, you would have taken partials, 1-to-1. You might have taken another partial part way up and then rode it the rest of the way. Stop loss would have been at break even, so you wouldn't have lost anything once it reached or wait, sorry, no, my mistake. I didn't catch this here. So what you can see is it did come back. So you would have been stopped out if you moved your stop loss to break even, but you would have taken 2 partials off of this, so you still would have been ahead when it came back. So here's another example of if you would have just left your stop loss alone, you would have been you would have reached the target. You would have did very well on this one. You still would have been fine. You still would have been in profit if you would have done it with partials and moving your stop loss. So now we're going to take a look at this next one here. And here we go. So it came up into the area, touched into the area, signs of exhaustion, and a bearish engulfing pattern. So yeah, this is another great example. Like this is just this is almost picture perfect for this one. And you're aiming for the low of the leg. So and that one went really well. So entered in on the trade 636, 646. So, you know, 10-minute trade, that's not a bad deal. So this is a really popular trade entry pattern that you're going to see over and over again. And I believe, let's see, I believe that was it. Let me just double check. Yeah, I don't see anything else lined up. So that's, like I said, there was a lot of opportunities there. So as we go through this, you can see 1, 2, 3. We got 4, 5, 6, 7, 8, 9, 10. That was it, yeah. 10 trading opportunities. So, you know what? Not bad. So there's always opportunities, and that's just off one pair. So, like when I'm trading, when I'm watching for trades, I'm only watching 2 pairs. And the 2 pairs that I usually use, EURUSD is a popular one. I look for pairs that have a very low spread, and so I only watch 2 pairs at the most because it's more than enough. On the 1-minute chart, you set your alerts. Trust me, this thing is going to be going off throughout the day. So if you add more to that, I think it's just a little too much for you. So I find 2 is just enough. And if you find that it isn't, add more. But start small and build your way up. And try these patterns. Like I said, just mark your areas off. So like if we go look, you can see how easy this is. And I'm not saying trading's easy at all, because I run into strings of losses as well. Nothing ever works out the way that you hope it will. Sometimes you get a streak of wins. But when you're looking at this, let's see. Oops. Sorry, 1 second here. When you're looking at this, let's remove those out of the way. It's pretty straightforward. So you could see like all these, okay, so all of these areas marked below here, what those are, let me actually show you what that is on the bottom so you can see why was I looking for price to react around those areas. So when you go back, you can see that it reacted there. So 1 second. Here we go. So you can see there's now you can see why I marked off the things that I did. So now I just marked below the wick because I expect price can come below it. Now you could see that if it comes down into this area, and I would have had an alert marked off just before, and I would have had another alert marked there and another alert marked there, so that's how I would have done that. So I'm just targeting. See, you could see here I grabbed the wicks and a little bit below it. There's no exact area for this. Like it's just an area. It doesn't have to be a 100% perfect. So you can be off. You can mark it a little bit bigger, a little bit smaller. It doesn't matter. So you end up doing that, and you're just waiting for price to react to these areas. So like I said, you know, this can be done. You just take some practice at this. Yeah, so you can see how these areas were marked. So just potential areas where price could react. So you could see price came down to this area, left, went through, came back and touched it. This is where you would have been looking for a potential area of trade entry. So just over and over again, you're just looking for areas where price reacted. That's it. Rinse and repeat, right? So, all right, guys. Bye for now.